Hello everyone, this is Matthew with MK's Traders, and today we're going to look at the difference between traders and investors. And along with that, we're going to look a little bit at the difference between technical analysis, fundamental analysis, and also the difference between day trading and swing trading, because these all kind of go hand in hand with trading and investing. So let's take a look here. What is a trader? So the most simple way to put this is a trader is someone that holds a security or a stock for a short amount of time. It's about as simple as that. So they primarily use technical analysis. I use the word primarily because both traders and investors use both technical and fundamental analysis. Just on the trading side, it's more heavily technical analysis, and on the investing side, it's more heavily fundamental analysis. But they use both. At least a good person should use a little bit of both. But mainly whatever they're doing. Like with traders, you mainly should be using technical analysis, but you should know a little bit of fundamental analysis too. And the time frame is anywhere from about a minute to a year. So that's what a short period of time is kind of defined at. So let's look at the difference between traders and investors. So investors, you like my little goofy pictures I have of these guys. Anyway, investors are primarily people who hold a stock for a long period of time. About as simple as that. And they primarily use fundamental analysis. They also use a little bit of technical if they're really good, but fundamental analysis. And their time frame is anywhere from 6 months to essentially forever. Because as Warren Buffett said, the best time to hold a stock for is forever. And he is definitely an investor, not a trader. Anyway, so you may notice that there's a little bit of a gray area. It's not as black and white as you might think. It's not some clear-cut line that, oh, if you're holding it for this much longer, you are an investor, you're not a trader. It's got a big gray area. Because I said a minute to a year, and then 6 months to forever. So there's that 6 months to a year, which kind of is the gray area in between being a trade or more of an investment. But it doesn't really matter. Just the big idea is investing is holding your money for a longer period of time than trading, which is just a short period of time. So let's look at technical and fundamental analysis. So technical analysis is, the idea of this is really using statistics or other mathematical functions to kind of predict, based on what a stock or security has done in the past, what it may do again, and make money off that, make a profit off how the stock is moving up and down. So it uses the past to predict the future, as I kind of wrote right there, by these indicators it uses. And it uses mathematical and judgment indicators. Mathematical indicator is like the RSI or the MACD, which uses like moving averages and momentum to kind of see if something's being overbought or oversold, or when you should buy and sell. Whereas judgment indicators is like candlesticks, where it just kind of shows you what people are doing. And using both of these is kind of what technical analysis is all about, and using this information to know when to buy and sell to make profit off things. And then using risk management and being is by nature, it's opportunistic. Opportunistic, is that how you say that? Because you're just trying to take advantage of the stock market. You're not really looking to invest and help a company by putting your money in, betting they're going to do well. You're just kind of coming in, coming out, making some money. And a big part about that is it's high risk, high reward kind of idea. You do that and you can make a good amount of money, but it's also extremely risky. So there's this whole idea, if you're good at using technical analysis, the big part of it is risk management. Knowing how much risk you're willing to take and how much you're willing to lose, win or lose. And so if you don't have a plan, you're just going to lose a bunch of money, which is what technical analysis is all about. Making money, not losing money. And then there's fundamental analysis. And fundamental analysis is kind of the complete opposite in the way of thinking about how to buy and sell stock. Instead of using the past to predict the future, you're just using research. You're going to look up CEO, the whole company, understand the company, think about whether the company is going to do well in the future, and look up all the industry stuff to try to figure out if in the future this is going to do well. You used price earnings ratio, the PE ratio, and other industry data to kind of figure out if something is over or undervalued. And based on whether it's over or undervalued, you decide whether you think you should buy in and it should go up. Like if something is undervalued, obviously at some time there's going to be a correction, and it's going to become, if not overvalued, just at the proper value, and you can make money off that. And the whole idea is of the price earnings ratio is, I think I explained it in a past video, but the price earnings ratio is the price is the current price it's being sold at as a stock. So it could be way overpriced, but if someone's buying at it, that's the price. And the earnings is how much they're actually making. So there could be a big gap between there, and that most likely shows that it's overvalued. But using price earnings ratio and other ratios and industry data, you can kind of figure out if something's over or undervalued, and that's the whole idea of fundamental analysis. And a big difference between fundamental and technical analysis is, with technical analysis, a big part of it is risk management, knowing when to cut your losses, when to just wait it out and stuff. And fundamental analysis, there really isn't much of that, because you don't really worry about corrections. And a correction is just when an uptrend kind of drops for a second and then keeps going. You don't really worry about that because you're just in it for the long run. And after every correction or even crash that's ever been there, there's always been a return, a recovery. So for a fundamental analysis person, for a long term or essentially forever, you're not worried about that stuff, and you're not gonna be cutting any losses. You're just gonna be holding it out, waiting it out. So let's take a look at day traders. So the definition of a day trader is about as simple as you could think it could be. It's the idea of buying a stock and within the same day selling a stock. And that is a day trader. There's really not much more to it. But let's talk about swing traders. So swing traders, the idea is you're buying and selling stock, but it's not within just a day. Not necessarily. It could be within a day. Swing trader is kind of a name that includes a little bit more stuff than just buying and selling in one day. But usually the time frame is more of like a week to a month, holding a stock for that time, and you're riding the waves, the ups and downs. You can kind of see how I kind of drew a little graph, goofy little graph with some circles on it. That kind of shows the buy and the sell. So you bought it low, you sold it high. Then you bought it again low, and you sold it again high. And that's the whole idea of swing trading. Now, day trading, you're doing the same thing, but it's just so much smaller because you're just doing it in a day, which in the real big scheme of things is not the real graph. It's just that you're like trading within the big line, and when you're doing day trading. But swing trading, sometimes there are these big jumps within a day, and if you're a swing trader, you're going to be buying and selling those as well. But swing trading is just kind of the idea of buying when it's low, selling when it's high, and just riding up these waves. And so is day trading, but it's not exclusive to the day. That's essentially the difference. So let's look at some examples of the difference between swing trading and day trading and a few of these other things. So right now we're looking at the BioCryst Pharmaceuticals Inc. So this is a pharmaceutical company, and it's pretty cheap. I think it's a penny stock actually. It's about $3, so it's pretty cheap. And the indicators I'm using right now is volume, the MACD, and the RSI, because with this application, it won't let me use any more than 3. I would use more if I could, and I'll definitely switch it out every once in a while. But let's just take a look here. So we're looking at the 1 month time frame. Yep. So every candlestick represents, I think, is it a month? No. I think it's about a day. We're looking at, if you look at the whole graph we're looking at from, let's see, where does it start? Okay, it's definitely not just 1 month. But, okay, I'm not sure. But I thought I knew what I was talking about. But we're looking at the 1 month time frame. So every candlestick is what? A small amount. But it's bigger than if it were a day. So you can see the time at the bottom though. So this is like February, starts right here, and over way back here is probably January. So this is looking at like about a month right here. This whole screen is about a month of trading. Yep, that's about a month of trading. I think that's why it's a month time frame, because you can zoom out and see a month. So let's talk about what a swing trader would do. So a swing trader, you see right here, would buy at this low and sell at this high. So if you were trading, let's say, this is over days, right? This isn't just a day trade. This is over days. He would see this coming, buy right here, or maybe buy back here, ride it up to here, and then he'd sell right here. Then when it dropped a certain amount, he would buy again and sell again up here. That's the whole idea of swing trading. Or another example is like, see this long bit right here? This could still be a swing trade. A swing trader could buy right here, and over this course of a couple months, ride it all the way up and sell up here. That's still a swing trade. He's using this. If you zoom out even more to 3 month, you see that's kind of, or 6 month, this was just a buy low, sell high. Same concept. This one's a little smaller, but buy low, sell high. So let's look at what a day trader would be doing. You'd be looking at this day time frame, which is all within a day. Really small stuff. And it's essentially the same thing as a swing trader, except for everything is tiny little moves. So it would be like, if you're just like looking at like a minute, buy right here, sell right here, tiny. Or buy right here, sell here. Or a little bit more long term, within a day still. Buy right here, sell up here. See, really small stuff, but that's essentially the same thing as swing trading. It's just within a tiny time frame, and it works the same. I think day trading is probably a lot riskier because it's just so short a time frame. It's hard to really tell if it's actually going to follow the pattern because it almost seems more random. But the indicators still work, and everything works the same way as it would in any other time frame. So that's the kind of difference between day trading and swing trading. And just to remind you, in the difference between technical analysis and fundamental analysis, the whole idea of looking at this graph with candlesticks and the MACD and the RSI all telling us stuff, that is all technical analysis. And this is stuff that a trader would use. A fundamental analysis person may look at this a little bit, or an investor may look at this a little bit, but they're really not too concerned. They're looking at more of the stuff that's at Robinhood, looking more at the PE ratios and trying to figure out if it's overbought or overvalued or undervalued. Not whether it's overbought or oversold. That's more technical analysis thing. They're trying to figure out that so they can make money off it. Anyway, I hope you enjoyed this video, and I hope you now understand a little bit more about the difference between a trader and an investor, and fundamental and technical analysis, and also day trading and swing trading. And I hope you have a great trading day, and maybe invest in this stock. I'm just kidding. Don't invest in this stock. Well, you could if you wanted to. It doesn't really matter. And if you liked it, please like and subscribe. Hope you have a great day.